Hey, it's Zachary Hogan from the DFW Trade House. We have our standard risk disclaimer. Remember, you are responsible for your trading decisions. You can feel free to check us out on Facebook, DFW Trade House. And today we are going to be doing a recap of what happened for the Canadian interest rates. We checked out the monetary policy last night during Asian session, and there was a beautiful analysis. It played out perfectly. We're going to see that on the chart in just a minute, and then we are going to be discussing what could happen for the euro minimum bid rate. Now, just to give you some more information, this is also an interest rate decision, and keep in mind they will be hosting a press conference which is going to be happening 45 minutes after the actual release. It is forecasted at 0%. I would anticipate that it does remain unchanged, and this is the Eastern time frame, so this is happening right before New York session begins, and we will be taking a look at what kind of an influence this could have in the market. Now let's go ahead. We have the US dollar Canadian on the screen. As we discussed in yesterday's video, our ideal buy limit area was between 1.2635 and 1.265. Now we can see here that on the daily we came right up into our target area that we were looking at. We can also notice what happened in here, and for the purpose of this video we are going to get into the hourly. So when we are taking a look at this, price was trading around the 1.26800 level. We drew out a little speculation. I was anticipating price to just come down into our buy limit area. However, during London we came up, created a new high right above our 38.2 Fibonacci, and then of course we did get some very nice downwards movement. You could have entered on a sell if you wished from the close of that candle all the way to the low. There's about 60 pips that you could have picked up on that. But really, when we discussed this, we were talking about a bullish trend. We were looking for buys. We did draw up this very small area of demand between that 1.2635 and the 1.26500 level we were discussing, and we can see here on that 10 a.m. candle, price came down. It didn't even go below our zone. The low is 1.26379. So if you did have a buy limit anywhere lower than that, depending on your spread and depending on the broker that you trade with, you may not have gotten filled. However, if you put one right at this median, as stated here on the video, you can clearly see it would have filled you no issue. Very little drawdown. Our stop loss was not even close to being touched, and then immediately within that hour we did come up. Here on this charting platform we did not hit the second target, but we definitely did clear our first one at that 1274 level. On the hour, from our buy limit to the high of the day, you would have been able to pick up about 170 potential pips of profit with absolutely no drawdown. This was a very good trade. Looking towards the end of the week, what I could expect on the Canadian dollar, it's really going to depend on what happens during London tonight. Obviously we could see something like a push up above our whole area that we're trading within right now. We could see price just kind of consolidate in this level until New York in the morning, and really I would not be surprised to see us close the week in this whole gray zone that we have on the chart. One area that we can keep in mind if we're looking to perhaps re-enter some buys, maybe you took profit, maybe you didn't get in this trade and you're looking to figure out what the next move is, I would personally be considering the 1.27500 level. You will see why here in just a second. I'm going to go ahead, remove that. A stop loss on this. For myself personally, I never like using more than a 30 pip stop. If we were to put that on the chart, just to give you an idea, it is right above that 38.2. So if there is an extended stop hunt, or perhaps if for whatever reason price continues to come down and come back into this area of consolidation, you would be stopped out. But just seeing how strong of an area of demand this is, I would not expect price to come back down anywhere near this whole zone for at least the remainder of this week. If we were going to be adjusting targets, we're going to come and take a look here on the daily. We do not need that text note anymore. And realistically, our next target area to the upside that we're looking at is above our 200 exponential moving average. Again, for new traders that are tuning in, this is basically taking the last 200 days of data and giving us this dotted line to show us an average price when it comes to the trading activity. I would be looking at the 1.29200 level. Let's just make that really precise here. And from the current price, if we were to say enter a market execution, that is about 125 pips to the upside. This is our end of the week target. Now, we could definitely hit that, and then, like I said, close the week anywhere in this whole gray zone. But I would expect us to close Friday around the 1.2800 level, the 1.28 level. So basically right about where price is now. If we do see these buy limits get filled, again, it doesn't have to be right at the 1.275 level. You could go a little bit higher, a little bit lower, depending on your spread, depending on what you want to risk, and depending on if you want to take this trade. You know, do your own analysis, make sure that you feel confident in it. And if you did happen to catch this trade here off of the interest rates, I mean, potentially you could be done for the week, depending on your style of trading. So that's all that we're going to look at here on the US dollar Canadian. We don't really need to update anything. We can see that we are having this bullish candle pushing above the high that we discussed over here. And really at this point, we are going to just have to have some patience and see what happens with the unemployment claims coming out tomorrow morning, as well as the advanced GDP on Friday. But for the US dollar and the Canadian, the rest of this week on a fundamental standpoint is very calm. And that's really just to say it in the easiest way. Let's look at the Euro USD because it is one of the most commonly traded pairs. We are on a weekly chart, and the first thing that I want you to notice is this gap in here. This was really the signal for me at the around, this was in April. This signaled to me the uptrend that would have been potentially coming. We can see what happened now. Obviously, backtesting is important, and this is one of those things where we want to discuss what could happen in the future. We can also see that there was another gap over here. As you become a better trader and as you spend more time on the charts, you're naturally going to be able to see things like this that could help you determine potential targets, because whenever gaps happen, it shows that there was a lot of interest in pushing price above or below that level. Now, just to quickly give you an example of a past analysis that I did, this is one scenario that we noticed here. This oval was our confluence zone to really just determine a target. One other chart here that I do have just for comparison, you can see my charts are very simple and clean, and we are going to do a fresh analysis. It's going to be very similar. We're going to come down here to the daily to draw our fib, and there are a few ways that you could draw this, but for me on this particular analysis, you did see the one way where I took the high of this candle and I came down to here. That gives us some confluence with our 38.2. That is one way you could do it from the wick to the wick. You could also be a little bit more precise and you could cut out the wicks if you really wanted to and only include the bodies of the candle, just to give you an idea of how that looks. Very, very similar. But with this particular chart, the Fibonacci, in my opinion, at this point, it's not super important. Of course, we can have it on here to consider, but just for the sake of keeping it clean, we're going to go ahead and we're going to take it off. Now we are here on the daily chart. We do have this gap. So we're going to go ahead, we're going to extend that out just so that we have an idea of where it coincides with the current price. We're also going to make notice of where some relevant demand lies. Both of these zones are about 40 pips. Let's just make it really, really precise. 1.196 to 1.2. So we have a 40 pip supply zone to the upside. And we're going to go from 1.168 to 1.172 just to have that on here, looking nice, looking clean. And this is really where price has been ranging within. We are in a bullish trend here on the daily with this news in particular. We can notice that there is one other gap in here, so let's go ahead, let's plot that out. I do want to see one thing here. So basically what we're looking at right now, these candlesticks are measured in price. Every single candlestick is 50 pips of trading activity. So we're not necessarily considering the amount of time that it takes, and you can see that clearly from right here. This candle opened on October 6th. This was also on the 6th. This was the 10th. The 10th. The 11th, the 12th, the 13th, 13th, 17th, 18th, 19th, 20th, 23rd, 24th, and here we are today on the 25th. So it gives you an idea of the amount of volatility, and looking at this, we do get another bullish confirmation. On this in particular, what I would be looking for personally is a buy entry. And if we were to go ahead and plan out a potential trade, one thing that we can notice is everything that's happening right in here. It does give us some confluence with our 200 exponential moving average on the hourly, right between the, let's just say, the 1.178. I like to keep it a little bit simpler than that. The 1.1775, 1.179. So this could be a potentially good area to put some buy limits. If we were to go ahead and pinpoint a specific price, like what we did on the US dollar Canadian analysis, I would be looking, just to keep it simple, the 1.177. This could be a nice area if we do see price push down into all of this consolidation. And then if we were to add our stop loss, I would say a maximum of 30 pips down at the 1.17400 level would be very, very reasonable. And then of course, we must determine our targets. the first target realistically looking to be about 90 pips at the 1.186. We can see why we're picking this target, because it clears these highs, which we could definitely expect when it comes to this type of news. If price does something similar to what happened on the US dollar Canadian, we could go and we could back test like we did for the USDCAD and take a look at past euro minimum bid rate news releases that came out and just see what those did in the market when it comes to how much movement. Was it more consistently bullish when it came out as expected, more consistently bearish? What was the trend looking like? There's a bunch of different things that we could do, but again, this is just something quick just to show you that as you get more in tune with the market, you can definitely get some very powerful trading positions, just like what we did with the US dollar Canadian. I'm fully aware that this could not go as expected. With our second target, we will be looking towards these higher levels right around this demand gap at the 119, and we're going to keep it simple. Once again, this would be a more realistic target for our second one, and then of course our third target, we will be looking a little bit higher. We're going to check out and see what this looks like on the daily. That's typically how I determine my targets, but I am just basing this off of the technicals right now. So this looks like a pretty fair trade in my opinion, something that could definitely happen if we do see price continue to rise, as well with the potential for our buy limit to be filled. We could see something like the US dollar Canadian, where if we go back to that chart, we'll get really close. We'll get down here on the 5-minute. You can see that this happened very quickly. This original movement to the downside where we would have got filled on our orders was in the first 5 seconds, and then it immediately started reversing. We closed the first minute around the 127,200 level, but let me just open up my broker so I can verify that. So just bear with me for one moment. The first minute after news hit, we had a close at 1.273. So you could have collected 100 pips just off of where you got entered up until that first minute, been done for the day. Of course, you could have extended that, allowed it to continue on through the afternoon, and you can see where we are right now with it being Asian session in the next day. Coming back to the Euro US dollar, we are going to get off of the 5-minute here, because it does not necessarily serve us at this point. And this would be something that I plan on trading. From where price is currently to our buy limit, we are looking at about 46 pips to the downside. So a little bit of a ways to go if we do get filled. Again, keep in mind this whole gray zone could be as low as price goes. It depends on what you're willing to risk. There's a 30 pip stop loss from this particular buy limit. Our first target, 90 pips, gives us a 1 to 3 risk to reward. Our second target, 150 pips, and our third target is just over 210 pips. So very high potential for something like this to happen. And again, fully aware of all of the potential risk with this trade. If we do see price move to the downside when this news releases, let's take a look here at the weekly. We can see that there is some space above where our 200 exponential moving average is. We are having a fairly bullish week overall, and really on the daily we do have a lot of space too. This candlestick right here from the 24th, very nice bullish indicator for me. I would expect the trend to continue towards the end of the week, but we can still consider the possibility for those of you who have a bearish bias. And really, that's looking down towards this whole zone that we have here, but it doesn't make any sense for me. I'm not looking for sells. We're going to just stay on the buy side. Make sure that you get plugged in, ask your questions, and follow us here on YouTube, like our page on Facebook, reach out, make sure that you take advantage of all of the value within the community. And I thank you for your time. We definitely appreciate you. And I am Zachary Hogan. We will see you next time I'm online.